Welcome back to Bazaar Morning Call. Well, let's go across to Manisha Gupta to find out what's the one commodity you need to be tracking today. Manisha, over to you.
Well, thank you for that, Sonia. I'm looking at metals as a sector because we've started Asia on a stronger note here. Last week was kind of uneven. We did not see all the metals gain up. Copper actually lost a percentage point in the previous week, but this week it has been on a firmer note and the markets are reacting to all the very positive data that has come in from China. So the industrial production at 5.3% on an year-on-year basis is higher than the estimate and has been on a stronger note as well on a month-on-month and a quarter-on-quarter basis as well. So that has been supportive. Apart from that, when you look at the China export numbers, that should come in on your screens, and that has been at a 15-month highs, 8.6% year-on-year gain coming in for that as well. So China production and export have been on the stronger side, but that's exactly where the stronger data from China comes to a halt. The imports have declined by 2.3%. So that tells you that within China, the domestic demand is not so strong, but the export demand definitely seems to be picking up. Now, when you look at the first quarter GDP numbers as well, were on the higher side. The second quarter GDP numbers have come in slightly at the lower side of 4.7%. And then the retail sales data has not been so great. Well, that's at a 17-month lows. The unemployment numbers in China also show an unchanged view there. So as I said, it's a half and half when you look at the Chinese numbers there. But because the production and the industrial data has been positive, well, that has been supportive for many of those metal prices. If you look at copper, aluminum, zinc, iron ore, steel, those prices are trading slightly in the positive right now. For copper, essentially, while of course the forecast of the demand going forward has been on the stronger side, the near-term inventories are much on the higher side. So when you look at the LME inventories, they have doubled in last 3 months. The Chinese production numbers have been up by 9.5% for the month of June. And that is the way the copper really seems to be behaving right now. Until the month of May, it was a $70 per ton of a discount to 3 months and cents of cash. Now that has gone up to $160 a ton. So that tells you that while the holding capacity and holding cost of copper has been on the higher side, it also has to do with the fact that the near-term demand on ground is not so strong. Is the reason we have seen the copper prices come off as well. So in the month of May, we saw all-time highs at $11,000 a ton. We are trading at below $10,000 at this point in time. What the markets will watch out for going forward is one, Powell testimony. Well, that is today. And then it also is about China's third plenum meeting. That starts today as well. The focus is expected to be on debt and manufacturing. Well, this is a meeting that will set course for the next 5 years within China. So would be essential to watch out for.
Okay, thanks a lot for that. Well,